Let's welcome in Sandeep Sabharwal. He's now with us. Sandeep, what do you make of the listing of Kathleen Civic Bank that happened, the response that Ujjivan Small get? I mean, CSB is trading at 3 times, but some of the other banks within the same area operating on similar or maybe slightly higher scale are trading at 1 time price to book.
That's what is happening. Because the floating stock is so limited. So typically what happens is that on listing, these stocks get bought up by institutional investors who believe that because of limited liquidity, the stock will be less volatile and it will not be prone to selling. And that's how all these IPOs are performing. But I think over a period of time, as the results come, so the same thing happened with RBL Bank. Initially, everyone was excessively bullish, stock ran up, there was limited liquidity, and then as the results started disappointing and some asset quality issues came up, the stock actually fell very significantly. So I think beyond where they are getting listed, there's little value. So even in CSB, I think there's little value beyond what it listed at around 300.
What do you make of the policy today? Were you surprised that they didn't cut, or you feel it was in line given that the consensus seems to be there's ample liquidity and this is not going to help to spur growth?
And inflation's also high.
Yeah, so that's what was my view last week. So in fact, I tweeted on this that there's no case for a rate cut this time because first, it's not that the economy is not slow. The economy is slow, the economy is doing badly. But the rate cuts they have done till now, the pass-through has been limited because of factors other than liquidity, because RBI made liquidity ample in the system, but then issues related to ILFS, then DHFL, some uncertainty due to India bulls, etc. So I think that's creating a fear psychosis of sorts in the market, and so the sovereign bond yields are at decent level, 6.5%, but then the spreads are very high still. So we saw no measures being taken to or announcements being made to address that issue from RBI side. It's not MPC's domain, it's RBI's domain. So RBI should do something on that front because and that's what was happened, and that's what was done in many other developed economies where the system froze. So, but they are not doing that effectively. They have maintained a accommodative stance, but if you actually read through or if you sat through his press conference, he seemed confused, and he actually wanted to give a hawkish picture without sounding hawkish. So my guess is that the rate cut cycle could be done. I don't think we are going to get any other rate cut unless and until food prices really crash over the next 2-3 months. And that could create some space, but then beyond, I don't think we are going to have a rate cut. On the policy front, now we have to wait till the budget to see what the government will do. So I think we are in a slow growth regime for some time. Markets seem to be dissociated from that reality at this stage, but I would think that markets should give up some of the gains from here.
Okay. And stay away from PSU banks in light of this. I mean, even though the government on its part has made all the right commentary, even the RBI governor, saying that we're completely in tune with any possible financial irregularity, all transparency is there, we've got it all covered. But banks are not too happy with the policy today.
Yeah, so they have been saying all of these things, but then if they were in tune with whatever was happening on the ground, 2 large institutions should not actually have fallen, like ILFS and DHFL shouldn't ideally have happened if they were actually so much queued on to the ground situation, which they were not. And the entire chaos in Yes Bank, the unreported NPAs, etc. of the previous management, so all of those should not have happened. So I think there are issues. So I think now the next event for all of us to watch is the budget, what they do there, and whether they do. So I think the limited thing they can do is to cut individual tax rates. I think that's the only way left to spur the economy now.
And that's a whole other debate as well as to the impact that'll have. But coming back to what you said, Sandeep, about you actually see a tapering off of the markets ahead of the budget, you mean immediately or you mean over the next few months?
I think markets have run up substantially. So markets were 10,500, 600. They ran up 12,200. So a large part of that was attributed to corporate tax cuts, which is a real thing and which should sustain. So my guess is that ideally market should give up a few percentage points for them to become healthy, because if they keep on holding on in light of adverse news flow from the economy as well as global uncertainties which are growing. So we really don't know what's going to happen on 15 December. If US actually decides to go ahead with the additional tariffs on China, we could see another round of sell-off. So the next few weeks, I think, are to be cautious about, and then we'll have to reassess.
How would you look at the mid-cap space at this point of time, after the run-up from the lows?
So mid-caps, we have to look at specific stories. So I think there are companies which would still have value. So I think all these transmission tower companies like KEC, Kalpataru, etc. So they still have value. Like some of these, like the multiplex space, Inox Leisure is something which I still like, because that space, the movie exhibition space, is still doing well. So I think case by case, there are companies which one can pick up. But then one of the themes which we ideally would have liked to play out was that the macroeconomic scenario improves, and as a result, the entire mid-cap space benefits. That doesn't seem to be visible at this stage. And on top of that, all these project cancellations or reviews which first happened in Andhra Pradesh, which hurt many companies. Now, if it actually ends up happening in Maharashtra, so these are large states. So I think those are also real impacts which we'll have to see.
Okay, some other stocks as well that I want to flag off. There's ICICI Bank that's holding out quite well. In fact, at record highs. And in the last 1 month as well, you've seen the stock gain quite a bit of traction. It's managed to outperform the Nifty Bank. There's been that positive management commentary as well as the target increase post the recent analyst meet by a lot of analysts on the street. 527 is where the stock is currently at. And there's then Godrej Consumer Products, or GCPL. In the last 3 days, it's been on the downward slide. The management as well had spoken about, willingness to sacrifice their margins for volume growth. And that stock, as we speak, is currently down 2.6%. Let's get in your view then, Kunal, on the charts. Both these candidates, ICICI Bank as well as Godrej Consumer.
I think ICICI Bank is one of the strongest private sector bank performer. I think in terms of prices, it's had a very strong leadership quality and impact on the bank Nifty. But now I think the indicators are getting into an extremely overbought zone on the very short-term charts. For case in point, I think the 200-day moving average, for example, for ICICI Bank is perched at 410, 415, and the stock is at 530 approximately. So there's a divergence of almost 120 rupees on ICICI Bank on the longer term average, and I think that could probably act as some sort of a mean reversion. So very short term view, I believe that the stock could see some bit of cool off or consolidation over here, because the averages have to try and match up with the price action, and that could probably take more of a prolonged time period. But yeah, I think the longer term chart still looks fairly attractive. Godrej Consumers, I think it's a structure which is getting weaker by the day. In the last 3 days, the prices have corrected, but the volumes have also intensified. I think today also the volumes are pretty much high for Godrej Consumers. It's on the verge of breaking its long-term average as well, quite convincingly. And if that happens, that could also call for some bit of more correction. So maybe a downside of another 5% from a very short-term basis on Godrej Consumers.
Okay, that's the view coming in on some of the stocks that are buzzing. But Sandeep, I'm aware that, you have L&T Finance. So we'll get in your view. But first, let's hear out the management. We spoke earlier this morning with Dinanath Dubhashi, who is the Managing Director and CEO. And he says that green shoots are visible, that asset quality is looking robust over the next few years. And brokerages as well continue to remain upbeat. Let's listen in.
So I think let us also understand, what is happening in farmer welfare. Okay, it's not just farm income. Various measures of governments have increased farmer welfare on its own. Right, simple things like house being available, toilets being available, insurance being available, healthcare being available. This is changing the nature of rural India very rapidly, and we believe, and you remember that we were the first to call out a drop in tractor demand, for example, last year. We believe that this basic farmer welfare level being high even a small increase in incomes, which will come out of a good Kharif and a good Rabi crop, can actually bring in a sustainable recovery. We are quite hopeful that this is not just a blip. We are, of course, reading early signs, no doubt, but we believe that, as I said, the whole of 2021 is expected to be a positive growth over FY20. We believe that the turnaround in rural sector, at least, is quite visible in fairly near term. I would like to take a few steps back to answer this question, right? Leave alone what happened with ILFS. We were, whatever we were always saying came out to be correct. We look good. Put that aside for a minute. What is important is why we were able to get a particular result in ILFS. On the other side, in the housing company where we had exposure, we are not near solution and we have just made provisions, right? What is the difference between these two exposures? Is that on something like ILFS, which is our core business, we are able to control outcomes. And that is why I always say, I'm asked about the real estate portfolio, and I always say the real estate portfolio is in good shape, not because
the view coming in. How are you looking at the valuation, Sandeep? What's the outlook on L&T Finance?
Is one of the strongest NBFCs along with some of the others, which got into some issues like the MD was saying first on the ILFS road projects where the payments were stalled by the NCLT bench, which then subsequently got cleared. And then also there, because since they are such a large NBFC, so wherever some institution gets into trouble, obviously they have some exposure or the other. So those issues were there. But at the current levels, I would think that there is significant value, because from here on asset quality trend should improve. They seem to have bottomed out, and on valuations, the stock had run up to almost 240. And at that time, it was at more than 3 times price to book. After that, there's been 1 year that's passed. All these companies are full tax paying, so their tax rate also comes down because of the corporate tax rate cut. I would think that the 140 target, which some brokerage has come out with, that's a conservative target. I would think that the stock should do better than that.
Okay.
Hello and welcome back. When we look at the markets, there has been some decline in the markets, and we can just pull that up for you. So 28 points down for the Nifty, the mid-cap index down 45 points, and the small-cap index is also looking in off the day's highest point. So it's not looking that good if you're a bull in the market. Suddenly there seems to be a little bit of sell-off. You cannot say that there is a sell-off in the market. It just seems that there is a little bit of move in the market on the downside. When I look at the losers, JSW Steel is down close to 3%. Airtel is down about 2%, and that's Bharti Airtel is down 2.5%. Tata Steel is down 2%. BPCL, IndusInd Bank, Tata Motors, Grasim, maybe you could include a Sun Pharma as well. Hero MotoCorp, SBI and Vedanta are some of the other losers. So that's what you're looking at when you look at some of the top movers. And when I look at the mid-cap space and really what's happening over there, so talking about the losers first, Hoodco is down 6%. Thomas Cook, of course, is an adjustment. Indigo is down about 5.5% now, 1,327 as far as Indigo is. Vodafone Idea is down around 5%. HDFC AMC is down 4%. You have a NMDC, which is down close to about 3.5%. Questcorp is down 3.5%, 486. Sadbhav Engineering is down about 3%. Awas Financiers is down about 3%. JSW Steel is down, but that we also spoke in the large cap ones. Jindal Steel, Reliance Capital, CCD, Future Retail are some of the other losers. Sandeep, in terms of financial names, we've spoken about L&T Finance, but you believe that people have to be very, very selective now? Because last 2-3 years, after October 2018, it's been very selective in move of financial names.
Financial, what's happening is that the particular stocks are getting... Those are the ones which are moving. So right now, I think ICICI Bank seems to be in fancy. Like last year, it was totally out of, no one wanted to buy that. Today, everyone wants to buy that. So I think that's what is happening, because most of the institutions are fairly well owned as far as financials go. So I think it's very tough for them to make space for newer ones. So So I would think that ICICI Bank, again, it's run up a lot, so we could see some bit of giving up of gains in that. But longer term, that obviously looks good. But I would think that HDFC Limited as a large cap financial should do well because of the issues of DHFL growth issues which India Bulls Housing could face, etc. The space will be occupied more and more by some of these bank subsidiaries like LIC Housing Finance or PNB Housing Finance or HDFC. I believe next year onwards their growth could actually pick up and margins could sustain because the liquidity in the system is ample, and that is giving larger borrowers great benefit because today in the CP market someone like HDFC can actually borrow at 5.5% for the short term, which the smaller companies actually cannot. So on the large cap financials, I would prefer these.
Okay, let's also take a look at what's in the news today. And there's also Thomas Cook on the back of that restructuring of the business. Do remember it's been the demerger of the HR business essentially into Quess Corp, where shareholders get 1,889 shares of Quess Corp of rupees 10 for every 10,000 fully paid up equity shares of 1 rupee. There's also the demerger of Travel Corporation India into SOTC Travel, the amalgamation of the residual Travel Corporation, TC Travel Services, and TC Forex Services, with Thomas Cook India. And post this demerger, Quess will directly be held by Fairfax Holdings. The public shareholding here will go up to 44% from the earlier 28%, and the appointed date from which the scheme is going to take place is going to be 1st April next year. Remember, the management has said that this is going to be a new and simplified group structure that will enable Thomas Cook as well as Quess Corp to grow independently. It will help consolidate both the companies' books in their segments, and they see more clarity as well as opportunity from both of the companies, not just for the companies, but the investors, the management, as well as the teams. That's the latest on Thomas Cook and Quess Corp. But in the meantime, Sandeep, wanted to get in your thoughts on Reliance Industries. Brokerages continuing to up their target price, looking as to how there's going to be a lot of unlocking of value with higher ARPUs due to the recent tariff price hike. Your call on RIL?
RIL has been one of the better performers, but I would think that most of the positives are in the price at this stage. So we need that stock to correct a bit before it comes into any kind of value zone, because if you remember, a lot of the upside also came because of the fact that there was supposed to be flow of money into Geo and into the refining business, which Aramco had to put in, but nothing really has happened on that front. So the monetization is still pending, although whatever is happening in the telecom sector benefits them, but that's largely built into this price. So I would think that if that fund flow does not come, which has been announced, then it could be a negative. So that's what we have to watch for. But at this price, it's fully priced. I would think that there could be some downside rather than upside.